Welcome to the Deep Dive. This show is brought to you today by Access Softtech, the premier provider of digital banking solutions. Today, we're plunging into a topic that's, well, it's been top of mind for us in our own research. We're talking about the essential strategies for digital banking ecosystems and integrations. Our mission for you, our listeners, really to cut through all the complexity. We want to pinpoint exactly what credit unions like yours need to demand from their digital banking partners. It's all about creating an agile, future-proof platform.
Yeah, and what's truly fascinating here, I think, is that the right digital banking solution, it isn't just about the features it offers today, not at all. It's about its inherent potential,
All right.
its ability to evolve and integrate with whatever comes next, which naturally raises a really important question for credit unions. How do you make sure you're choosing a partner that actually enables that evolution instead of, well, locking you into something static? Exactly. Our own deep dive into this landscape suggests that the best solution, it absolutely has to be more than just some innovative product with great features. It also really needs to be an open platform, one that empowers credit unions to build out a really robust ecosystem of third-party integrations.
Indeed. And while, sure, the core integrations like bill pay, e-statements, check images, mobile deposit capture, those are table stakes now. They're expected on day one. But the real differentiator for you comes with the ability to quickly, swiftly integrate that important new fintech solution you just saw at Finovate, maybe,
Yeah.
or Money 2020. That's where the real innovation happens.
Okay, and here's where it gets really interesting, and frankly, a bit concerning based on what we found. Our research, it uncovered stories. Stories where some digital banking vendors just flat out say no to new integrations. Or, maybe worse, they promise they can start the work in, say, 18 months, or even 2 years.
Years, yeah, it happens. And the real kicker, some credit unions only find this stuff out after they're already deep into a 5-year contract. That's just a serious problem, right?
That is.
It essentially paralyzes any future innovation you might want to do.
And this often stems from a few places. Sometimes it's legacy system architectures. They're just rigid, difficult to connect to. Other times it's actually the business model. Some vendors prefer to control the entire technology stack, you see. So that makes external integrations either really costly or technically prohibitive for them. Understanding that underlying dynamic is key. It helps you predict future roadblocks, choose wisely. What you really need to look for are companies that offer clear options for how to make things happen.
Ah, okay. So instead of just getting a flat no, they should be saying, okay, here are your options.
Precisely. And crucially, one of those options should always be, here is the API and SDK documentation. Let us know if you need anything else.
Yeah.
That right there, that's the hallmark of a truly open platform. An API, the application programming interface, it's basically the set of rules letting different software talk to each other. And the SDK, the software development kit, gives developers the tools and guidelines they need.
That makes perfect sense. Okay, so with that in mind,
Yeah.
what does this all mean for you if you're maybe evaluating solutions right now? We've actually distilled some pretty critical questions to ask vendors before you sign any contract.
Absolutely. You need to ask them directly. Number one, will I be able to have a third party do the integration work on my schedule, not locked into yours? 2, is the SSO API, that single sign-on, letting users log in once for multiple apps and the SDK available for me? For any third party I choose.
Okay, any third party, that's key.
Yes. 3, is that SSO API an industry standard, like SAML, OA Youth, or OIDC? Using standards like these just makes integrations much, much smoother and more secure. They're widely accepted protocols. And 4, can I release the third party into production on my own schedule, or do you, the vendor, control that release? It's about your autonomy.
That's a fantastic checklist for the vendor conversation itself.
Right.
But look, once you have answers from them, the next step, and it's crucial, is validating those claims. You need to talk to their references. Here's what to ask them.
Right, this really connects to the bigger picture. Validation. Ask those references. 1, have you actually initiated third-party integrations? Get specific examples. 2, who did the work? Was it the vendor, the third party, someone else entirely? 3, how long did it really take from start to finish? 4, how much did it cost? Realistically, what was the budget impact? And 5, this is critical, did the vendor ever say no to any integration requests you made?
Okay, great questions. Now, before we move to sort of our final takeaways, here's a practical tip. A consideration that could save you a lot of time, maybe a lot of money too. Before you commit to a brand new third-party integration, always check with your digital banking vendor first. See if they already offer an existing integration to a similar product. You might be surprised.
That's a great point. And it raises another important one, almost a warning, really. The third party you're looking to integrate, they will always say it's easy and quick. Always. They might claim it'll only take them a week. Don't let them estimate the work required by another company. It's like, I don't know, asking the painter how long the electrician will take. It doesn't work. You need your primary vendor's realistic assessment of their part of the job.
Right, get the estimate from the people actually doing that piece of the work. Makes sense. So, okay, let's summarize. The core message from our deep dive today seems pretty clear. Proactive, informed questioning before you commit. That's your superpower in this digital banking landscape.
Yeah.
By asking these critical questions we've outlined, you can avoid some really costly disappointments down the road. And you can truly empower your credit union with the flexibility and the agility it deserves for the future.
Absolutely. Now, here's something to think about as we wrap up. Beyond just avoiding the pitfalls, how might a truly open, genuinely integrated digital banking platform transform the very nature of the services you could offer your members tomorrow? Think about freeing up resources, not just for keeping the lights on, but for true, maybe even groundbreaking innovation. What could that look like for you?